This is Wall Street Examiner Quick Facts.
I'm Lee Adler, and I'm here to give you the facts that Wall Street's captured media doesn't want you to have.
The U.S. Department of Labor reported on Thursday that first-time unemployment claims, actual, not seasonally adjusted, totaled 287,000 in the week ended May 3rd, a decrease of 31,000 from the previous week. The seasonal factors had expected a decrease of just 7,500 from the prior week. There were 301,000 initial claims in the comparable week of 2013. Initial claims were 5.2% lower than the same week a year ago. This is within the range of change of the past 3.5 years, which has typically fluctuated between -5 and -15%.
The seasonally adjusted headline number was 319,000. According to one major survey, the consensus of Wall Street economists was for a gain of 325,000. The seasonally adjusted number is a fictitious number made up to smooth the trend to account for seasonal differences. While these numbers are a representation of the trend, they sometimes give false impressions. Last week, the headline impression and the actual trend were consistent. Regardless of whether the headline print accurately represents the reality or not, the market reacts to that headline print, not the actual trend. While this data is not a market trend driver, it is of interest as a potential early warning indicator that the stock market is not consistent with the trend of the economy. It can alert us to bubble behavior.
And one other fact of note, the current weekly number was at the strongest level since 2007. New claims were just 0.207% of total non-farm payrolls. That is similar to the May 2007 reading of 0.204%, as the economy was just about to collapse. At the end of the housing bubble in May of 2006, this rate was just 0.235%. So the current rate is lower than that. By this standard, the economy appears to be stretched to its limit. This is as strong as it's likely to get. One thing seems clear. While stocks have run away in a Fed-printed bubble under QE3 and 4 since November 2012, jobs have not seen a similar benefit. A similar divergence developed in 2007 as the market was topping out. This Wall Street Examiner Fast Facts has been brought to you by the Wall Street Examiner Professional Edition, focused on the analysis of macro liquidity and market cycles for professional investors, traders, and sophisticated individual investors. Try it risk-free for 30 days at wallstreetexaminer.com. Get the facts. wallstreetexaminer.com.